in my decades-long career in the securities industry, I'm often asked what is one of the things that makes the American financial system the envy of the world? And it is. It's not perfect, but it is the best on the planet. And one of the things I point to is that we have an industry of really innovative, driving hard, competitive players. We have a regulatory regime, whether it's the SEC or whether it's the CFTC and other governmental bodies in state and local and federal. But what we have in the middle is unlike and unusual for the rest of the world. We have FINRA, which is a really, really critical role, plays a really critical role as a self-regulatory organization, and they do it better than anyone else. So I think that when you understand the overall vigor and rigor of the U.S. financial services system, you really do have to understand that all these different players are involved, and that we're really, really lucky to have both an organization like FINRA stepping in as a self-regulatory organization between their members and between industry and helping drive industry practice. And let's give a shout out to Guy and the rest of the media, because we need that transparency. We need that spotlight in order to illuminate the issues and have that rigorous discussion. So again, thanks to both Guy and Robert. Great session. Really do appreciate it. We are now getting ready to do the next panel, which is another regulatory focused panel. This one is focused on the Securities and Exchange Commission, and you can never understate the impact that the Securities and Exchange Commission has in making sure that we have a fair, efficient, and equitable markets here in the United States, and with first and foremost investor protection. We're very lucky that this panel is going to be moderated by Michael Piwowar. Michael is the executive director of the Milken Foundation, and he specifically is the executive director of the Milken Institute Center for Financial Markets. He's also a distinguished policy fellow here at the Georgetown Center for Financial Markets and Policy here at the McDonough School of Business. I've gotten to work with him many times over the years. At NASDAQ, when he was in the Banking and Finance Committee, we had our CEO, Bob Grayfeld, come in and testify, or whether or not it was when he was at the SEC, trying to push forward different, working together on different objectives, et cetera, coming out of the financial crisis. He's always been, a really thoughtful, really smart person, but he's also someone that is really patient, really takes the time to hear all sides of an issue, and couldn't ask for a better person to have been in the role when he was at the Securities and Exchange Commission as a commissioner. He's also a Hoya, so that's always a big plus. He got his MBA at Georgetown. He went somewhere else for some other degrees, but we don't talk about that at a Georgetown conference. Mike is going to be talking to two SEC commissioners, Commissioner Crenshaw and Commissioner Roisman. We're delighted to have them both. I cannot imagine a more interesting time to be an SEC commissioner. Maybe the financial crisis back in 2009, maybe when the SEC was first formed, but right now the issues facing the U.S. securities markets are second to none. I think we've seen this theme mentioned by multiple speakers we've had throughout this conference, that all the things going on today, whether it's the racial injustice that Guy and Robert just talked about, whether it's the issue of the pandemic and the impact on the economy, the shocks of oil, the trade wars that we've had, all those issues are just accelerating the changes to financial services and the firms of financial services. That's why the theme of this whole conference has been how financial markets are addressing societal changes. So I think it's and the SEC is absolutely at the crossroads and center of that discussion. So I am just I'm looking forward to learning a lot. I always do. And so at this point, I'm going to turn it over to Mike and let Mike take over and go ahead and moderate his panel. Thanks, Mike.
Great, thank you, John. And just to reiterate your point about that the SEC is at the intersection of a lot of important things going on right now. We actually have a very slight delay from our two commissioners who are going to join us because they're actually busy working on some things right now. So they're going to join us in a few minutes. But what I thought I'd do, John, is maybe we could go ahead and start with the introductions and talk a little bit about, you and I can talk a little bit about maybe for our audience who isn't familiar with how the commission is organized and the changes they're going to be going through. So,
sure, great.
So with that, I'm pleased to be joined. We're going to be joined by Commissioners Caroline Crenshaw and Elad Roisman. Both of them are two members of a 5-member commission. And so for those not familiar with how the SEC is organized, it is led by a 5-member commission, and each of the commissioners are appointed by the president and confirmed by the Senate. Now, by statute, the president can only name 3 of the commissioners by his or her own party. And so at any given time, there are commissioners who are in the majority, 3 of them, and 2 that are in the minority. Right now, obviously, because President Trump is the president, at least for the next 2 months, the commission is a full 5-member commission. It is led by Jay Clayton, and there are 2 Republican commissioners, and Elad Roisman is one of those. And there are 2 Democratic commissioners, and Caroline Crenshaw is one of those. Now, on January 20th, when Joe Biden becomes president, he will have the opportunity to name a new chairman. In fact, the current chairman, Jay Clayton, has announced that he's actually leaving at the end of this year in December. So there'll be a 20-day period in January where there will be a 2-member commission, and the acting chairman will be designated by President Trump. More than likely, the senior-most Republican commissioner, Hester Peirce, will be leading that. And so in today's discussion, I have a number of questions for our commissioners. One, the first thing I'd like to do when we have them join is to get them to talk a little bit about themselves. They both have some unique backgrounds. They have backgrounds that make them well qualified to be commissioners at the SEC, but they each have some unique things about them. And so I'd like them to talk about that. The second part, what I'd like to have them do is talk about some of their personal priorities. So every commissioner comes in with their own experiences, their own expertise, and the SEC's mission is a 3-part mission, which is to facilitate capital formation, protect investors, and maintain fair, orderly, and efficient markets. And so some commissioners have a particular interest or expertise in one of those 3 parts of the mission, and so they each bring their own expertise to the table. So I want to try to get to find out from each one of them what they want to talk about there. And then, given that we are going to have a changeover in administration, what is likely to be on the SEC's agenda in the short run over the next 2 months, in the medium term when they are down to a 2-2 commission, which means that at that point everything has to be done on an affirmative vote by the commission, whether it's regulatory policy or enforcement cases. And so by definition, anything that gets done during that period has to be bipartisan. And then in the longer term, who is Joe Biden likely to nominate, and what type of person is he likely to nominate as an SEC chairman? What type of priorities is that chairman going to have? And so that's the scope of the discussion we're hoping to have today.
Great. So Mike, let me ask you a question, since we have just still another moment or two. So as you pointed out, many times the commission isn't 5 people, right? It's at 4 or 3. I do seem to recall one time it was down to 2. And that does pose, and you were a commissioner sometimes, not a full strength, that poses a actually logistical challenge and all sorts of other issues, because like if there's 2 commissioners and they run into each other in the hallway, that almost constitutes a public meeting. You got to separate them. You got to make sure they don't bump into each other, right? I mean, there are some real issues surrounding the openness of how the SEC commissioners must conduct themselves. And I don't know that the audience necessarily appreciates that, those kinds of details.
Yeah, so you're right. There's something called the Government in the Sunshine Act, which the intent of the act is to add transparency and accountability to the government. And as you pointed out, that if a quorum of the commission meets together, that's deemed to be, and deliberates on policy issues, that's deemed to be a public meeting and has to be open. And so when the SEC does meet as a commission, it has to announce it. It puts it in the Federal Register, it's on the website. Anybody can, attend a public meeting. Most of them are done over the web right now, so that's how most people can occur. But you're right, when we actually got down to 2 commissioners. In fact, when President Trump came in, we got down to 2 commissioners. I was acting chairman, and then there was Commissioner Stein. And when two of us got together, we constituted a quorum. And so we had to be very careful that we didn't trip that, right? And so, now, the joke between Commissioner Stein and myself was that when we got together, we never talked about policy. We talked about our kids, we talked about things going on and all this sort of stuff, but we didn't want to have the appearance of it. So what did we do? Well, first of all, we knew it was coming because the former chairman, Mary Jo White, was going to resign on inauguration day. We would get down to 2. And we had about a 2-month head start during the lame duck session, part of November, December, January, almost 3 months. And so what we decided to do was meet during that time, because we're still, we could talk. And the quorum at that time was 3, so 2 of us could get together. And we sketched out, we said, look, we don't know how long we're going to be down to a 1-1 commission, but there's an opportunity for us to get some bipartisan things done. And so we were actually able to do some things. So for example, we shortened the trade settlement cycle from 3 days to 2 days. It was something that had been out there that just had not gotten done. And we did a number of other little things too that I was very proud of that we did during that period. And then once January 20th hit and I was acting chairman, we were down to 2 of us. How did we work? Well, I could talk to her councils, she could talk to my councils, and our councils could talk to each other. And so that's how we got around it. And so one of the things that both Commissioner Crenshaw and Commissioner Roisman have in terms of their background is they both served as counsels to former commissioners. And so that is a hugely important role. And one of the things I'm hoping to get out of our discussion is the fact that, by serving as counsels, they were the go-betweens most of the time between the commissioners' offices, not only during, when we got down to 2 commissioners, but even when you're at a full commission of 5, 3 commissioners can't get together and meet. You have to do one-on-one shuttle diplomacy back and forth. So, so the councils get involved in all kinds of things.
Yeah, it's fascinating to do. But you use an example which I think which reinforces the point I made earlier about the criticality of the SEC. One of the things you got done bipartisan was moving settlement from T3 to T2. And for those who outside this industry, and maybe even a lot of people within the industry, don't understand how important it is. I had come into the industry a long time ago when it just moved from T5 to T3. And the first thing that everybody realized was, with the certainty about the settlement moving 2 days earlier and now from 3 to 2, there is so much more certainty among the buyers and sellers. And what they do, they redeploy that capital back into the markets, increases liquidity. It is a tremendously positive thing to shorten the settlement cycle to allow for buyers to get their securities earlier and sellers to get their capital earlier. And I know that they're still working on, there's a plan to keep going. Down T1, T0, et cetera, and all those kinds of things. But anyway, that was to me as a perfect example of bipartisan work to do what's best for the entire market, and how the SEC can lead by getting those kinds of things done. Because I don't, it's one of those things you don't realize, but the plumbing of the securities industry really makes it work.
Yeah, it does. And thank you for mentioning, right? So we were very proud of it. It takes out systemic risk in the system. There's overnight sort of credit in there. It makes the system more efficient. And you brought up sort of, going to T1 or T0. And the question is, well, why didn't we shorten the settlement cycle even shorter? And we decided that at the time, it was much easier to go from T3 to T2 for a couple of reasons. One, a lot of the other developed markets, capital markets in the world were on a T2 settlement cycle. So one of the things it did was it aligned us with them. And so global financial institutions that have to work across different markets, it makes it much easier, and there's added consistency with them. The other thing we ran into, right? So people kept coming to us and they would scream blockchain, 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 right? We can just go to T0 and do this with, T plus epsilon or a very small period of time. And while that may be true in the case of settling the securities transactions, one of the things we also have to remember is that, when people transfer money back and forth, we're using the banking payment system. And there are some people who still write checks to their brokers that has to go through the check clearing process, which can take up to 2 days. So one of the things we were mindful of was we didn't want to go to a situation where the securities would clear on, say, a T1 basis, but then the check would come back with non-sufficient funds, on day 2. And so we ran into that. So we went as far as we could, given the speed of the current payment system in the US. And so you're right, we could get further efficiencies out of the system, but what that would require is that the banking regulators and the Securities and Exchange Commission would have to work in concert with one another. And then again, at the global level, trying to make sure that we're coordinated with everybody else. So
yeah,
that's good.
Great, thank you.